Good morning, everybody. Happy Friday, September 18th, 2020. Stock market today brought to you by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show, give you daily stock ideas to consider. Hits your inbox every trading day before the market opens. As always, this is Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at Dan_Russo_CMT. Let's dive right in. U.S. equities were lower in Thursday's trading, though off their worst levels. Materials and industrials outperformed again, while REITs and comm services lagged the broader tape. Treasuries were mixed. The dollar lagged on the yen and the euro. Sterling was actually a little changed, despite headlines that the Bank of England was exploring a negative rates policy. Gold ended down 1%. WTI crude was up 2% on the day. And as we get to the desk this morning, futures have been trading around the unchanged mark for the S&P 500. European equities were mixed to slightly higher overnight after mostly higher sessions in Asian trading. Treasuries are mixed once again. The dollar is down on the yen and sterling crosses flat against the euro. Gold is up 60 basis points. WTI crude is up 40 basis points and on track to post its best weekly gain since June. That's the framework. That's the setup heading into the final trading day of the week that sees the S&P 500 remain below the key 3,400 mark. We've been talking about it. We've told you what it means. Below 3,400 raises the odds of a test of 3,250. We've showed you the Chaikin bullish percent. Started highlighting it last week, how the cross below 30 increases the odds of volatility in the market with a slight downside bias. And that's largely been the case throughout the course of this week. We've had some volatile trading, a few 1% days, especially for the Qs, which so far are holding the key 270 level, just barely so. We closed at 270.32 yesterday, but that counts. It's greater than 270. And if they're going to rebound, this would be the place to start. We talk about it being oversold in our note today, based on our overbought, oversold indicator. A lot of detail in that note as it relates to some of the key themes that are weighing on investors' mind in the equity landscape. So that's kind of important. Those of you who received the note, I urge you to go through it. IWM holds 150, and an improvement here would be a good breath signal as far as I'm concerned, right? If we could get the small caps into gear, trading back up near their highs from earlier this year in the January-February timeframe, that would lend a further breath confirmation to any rally in equities, right? Broader is better. One of the big hangups for investors over the past couple of years really has been just the concentration of leadership into those large mega cap tech and consumer facing tech companies. So broadening out of the leadership would really be a positive sign for equities. So we'd love to see IWM hold 150 and continue to work higher. These are the key levels. These are the levels that should be on your mind. These are the levels that should be driving your roadmap in the days and weeks ahead. So just kind of bear this in mind as we move forward. So hitting our market in a minute now. What are we writing about in the note? Well, we touched on the Qs a little bit. They're oversold and at support. As the growth value ratio remains extended. Now, we've been talking about this since the end of August. It was the end of August in my Friday note that I highlighted the growth to value ratio, and I said, do not chase this here. It is 20% above its 200-day moving average. And now, over the past couple of weeks, what have we seen? We've seen a sell-off in growth relative to value. The ratio is still somewhat extended. It's still about 12% above the 200-day moving average. But what's interesting is it's traded into a support zone now. So like the Qs, if growth over value is going to reassert, this would be a nice place to start. But it's going to have to do so within the framework of near-term weakness in semis on a relative basis as that persists. We do have new highs for the transports, which is something that we called out back in early August. We highlighted a personality change of transports beginning to outperform the broader market. And we wrote at that time in our note that that likely meant we were going to attack the highs. Well, we're there. Futures, as I said, though, point to a mixed open here today. S&P oscillating above and below the zero bound in terms of changed or unchanged on the morning. Let's move to our major indices now from a power bar perspective. Some further deterioration here. Dow down 50 basis points, 5-3 bulls to bears in that metric. S&P 500 down 87 basis points, 120 to 76. bulls to bears there. Further deterioration. NASDAQ was an underperformer once again. Your weakness in those growth, big cap tech names, 17 to 11. Bulls to bears as that group continues to see some deterioration in the ratio. Small caps down 70 basis points, so a slight outperformer, 643 to 290. Bulls to bears. Bonds uptick, sending yields lower. According to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. Major indexes across the board are still mixed. Let's hit our stock of the day now. We talked about transports in our notes, so why don't we find a transport stock that's still very much in an uptrend and presenting an opportunity as far as I'm concerned. JB Hunt Transport, JBHT, the ticker symbol here, in a down tape yesterday, closes up 2.2%. Rating here is bullish based on our 20-factor model. The trend is strong as the rising long-term trend line acted as support to some early selling pressure yesterday before a rebound ensued. Industry group is strong. Road and rail within the transports is a good industry group to take a look at. As I eye this one up, I could arguably say that 5 of the 6 key metrics that we look at on a stock line up well for JBHT. The one that doesn't is money flow. It has turned bearish on this sell-off here. But if we take a weight of the evidence approach and identify a leading stock and a leading industry group, JBHT looks compelling. Triggered a relative strength breakout signal today within our model. So we have a bullish stock that is reasserting some relative strength. Overbought, oversold indicator is oversold and beginning to turn higher. And I think that's important, right? Because there's nuance, right? There's a difference between just entering oversold and still heading lower, right? You can see it here, right? Higher probability setup, nothing guaranteed in this world, especially in investing, but higher probability setup is when the indicator bottoms and begins to round higher, and that is the case here. So I take the weight of the evidence on JBHT, and I think it looks compelling. I've highlighted in my note. I'm highlighting it here for you today. If you are looking for some names away from those tech names that are under pressure into an area of the market that is starting to show relative strength or continuing to show relative strength, take a look at JBHT. Let's hit our sector tracker now. Movement of the major sectors over the last 5 days of trading. Energy, top of the list. Okay. Still an ugly trend as far as I'm concerned. Materials and industrials are 2 favorite cyclical areas of the market, continuing to show strength here this week. Persistently in the top performers on the day as we've done our work this week. REITs, healthcare, utilities, and financials, a middle of the road but higher. Discretionary, call it flat. Staples, call it flat. It's kind of interesting that as the market's been under pressure, staples are not outperforming. If you take a look at my note today, we look at equal weight discretionary staples, and we can see discretionary actually outperforming. Tech and comm services at the bottom of the list. We'd love to see that tech rebound. I think I've kind of laid bare to you what I think here in terms of the cues and growth versus value, but we will take a look a little bit later on in the show. Turning now to our industry and focus, regional bank services, and my initial thought here is you can have them. Over the past 6 months, this group has been an underperformer by about 19%. However, power bar ratio is strong, 42 to 21, currently ranked number 8. If you're going to go bottom fishing in the banks, take a look at Hilltop, PacWest, and First Bank Corp. I'm just not there yet. I think that it's not an all-in, all-out bet. Growth, value, momentum, cyclicals, right? You have to do the work. Materials and industrials within the cyclical landscape look much better. I've said this 100 times over the past couple of weeks. Materials and industrials look much better than the financials and energy. And certainly within the financials, the banks and the regional banks are underperformers. Just take a look at the KRE here, the S&P Spider Regional Bank ETF. Neutral rating, trend is above the trend line, so it's strong, but everything else here just screams we're not ready yet. Persistently bearish money flow, i.e. under pressure. Look at the underperformance since the start of the year in January, persistently an underperformer. So it's hard to get excited about the group. Really, it is oversold, so maybe not the best time to open bearish, but certainly better opportunities out there if you are playing the rotation. And I think we've kind of pounded the table pretty hard on what we think those opportunities are. Let's take a look at what's trending now yesterday's S&P 500 movers and shakers. On the gainer side of the board, Mosaic is interesting. Why is Mosaic interesting? Because one of the themes that we've been highlighting is an inflation theme and what that means for commodities. We've talked about precious metals in our notes quite a bit. Our market survival guide, our weekly strategy piece that comes out on Tuesdays. For the past few weeks, we've been highlighting strength in the ags within the commodity space. And I recognize that not everybody likes to trade commodities or has the capacity to trade commodities, but you can play the theme in equities. You can look at ETFs like MOO or COW or individual names that have leverage to the theme, and Mosaic, MOS, is one of them. Up 6.4% yesterday. Solid name there with a bullish rating. MetLife M&A activity and repurchase commentary send that stock higher, 4.5%. GE presented at the Morgan Stanley conference on Wednesday. Investors digesting what they heard there and coming away bullish, up 4.5%. Hologic, nothing company specific there, up 4%. Same goes for Jack Henry. Didn't see anything company specific to send that stock higher by nearly 4%. Illumina still seeing pressure from the recent announcement of an M&A transaction, down 7.5%, down big second day in a row. AMT, JP Morgan note, sent that stock lower by 4.7%. I think the note was centered on the group in general. NTAP, some reactions to their analyst day, down 4.25%. Southwest, LUV, nothing company specific. Same goes for Dish. Didn't see anything company specific to drive trading in that name. We'll note that the media names were under pressure yesterday, so something to just kind of bear in mind. Let's dig into the charts now. This, to me, is the biggest debate in the marketplace for equity investors right now. Is this rotation real? Does it have legs? Are we leaving a growth regime and going into a value/cyclical regime? And I would say it's slightly nuanced, okay? This trend is still up, right? Up and to the right, it's an uptrend. We haven't even made a lower low yet, right? From a bigger picture trend perspective, still above the 200-day moving average, but extended, right? Extended above the 200-day moving average. Here is where it was trading back at the end of August when I said don't chase. So hopefully you didn't chase. And now we've fallen back into this support zone. So like the Qs, if growth over value is going to reassert, this would be a nice place to do it. The RSI of the ratio still in a bullish regime, right? Down at 42, has not broken out of these bullish ranges or broken down from these bullish ranges yet. So that is compelling. So now it's prove it or lose it time for this theme. Within this box here, if growth is going to reassert, it should do so from here. And the same goes for the Qs on a relative basis. Here's Qs against the SPY going sideways and holding just above the breakout level. So now's the time. Within the next few days, within the next week, if these themes are going to continue to move up and to the right, it should start now. Right? The Qs are oversold at support. This ratio is holding a bullish regime from a momentum standpoint and into support. This is the time to do it. And in particular, you're at the inflection point in the copper to gold ratio. Check out copper versus gold, rallying back to the 200-day moving average. Now, this has been a key driver because if you look in the middle, there's that growth value ratio, and then the 252-day rolling correlation of the two. And while nothing is perfectly correlated all of the time, what sticks out to me at the bottom of this chart is that this correlation spends most of its time below zero, meaning that when copper is lagging gold, growth is generally outperforming value, generally, most of the time, right? So at the inflection point for copper versus gold, if this ratio breaks the 200-day moving average and continues to move higher, odds favor the growth over value theme ending and breaking lower. If we fade from this 200-day moving average on the copper versus gold ratio, just as growth over value is in that support zone, we would expect it to reassert to the upside. So we're watching this one very, very closely, as well as the relative performance of semis, which I highlighted here last week. Near-term trend under pressure, broken the line off the March lows, and in the interim, heading to the downside. Still very much in a long-term uptrend, similar The RSI is holding a bullish regime as semis consolidate on an absolute basis. So inflection point is the word of the day, the word of the week for these big themes that are playing out, in my opinion. So that's going to wrap us up. I hope you have a great weekend. Take us for a test drive. Thanks for spending your morning with me. I'll be back Monday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.